Happy Sunday, beautiful black people. Welcome to today's Money Church. This is the time where we talk about finance and investments with no fluff. Jimmy's got a great presentation for y'all today about EPS, or earnings per share. And it's one of those metrics a lot of people overlook, but there's a lot of value for that. But what's up today, gentlemen?
Hey, man.
It's really good, man.
As you see, I got the shadowy super coder on, so you know it's time to get into it, good brother. How are you though? I mean, it's tax season, man. So you know, we should be checking on you.
How is that going to happen? I'm here working, and I got clients waiting on me, so it's stressed as usual.
Hey, listen, man. This
But it's all good.
Enjoy though. This is your Super Bowl right now.
I wouldn't say that, but I understand the analogy.
So what else is it to compare it to? You know.
Give me a minute. I'll think on that. All right, we see people coming into the church, filling up the pews. Shelby's here.
What's up, Shelby?
Miss Maui. What up, Lorraine?
Hey, how are you?
Maui, are you going to Maui? Like, is that the vision? Is that on the vision board? Tell us what's going on.
Corey, what's up, bro? Quiet over there. What you over there, man? You over there putting parlays in?
No, just checking on stuff. You know, I'm a few thousand miles away from my boys, so I gotta check on things. But
Understood. All right, so yeah, so this is our Sunday, what we call our finance church. But you know, I got a quick presentation. We're not gonna be here for a long time, but a good time. But we will discuss some things that are important in your journey as an investor and a trader. And for those that are in the village, first of all, if you're not in the village, then that's problematic to begin with, right? Because everybody should be in the village. Morning, I should knock the doors.
Good morning, Don. Good morning, Don. Turn it off right. What up, Jamil?
Oh man,
Don is comical.
you.
Oh, Maui is where I like to build my vacation.
Nice. On Maui. Nice.
All right, so if you're not in the village, please join by going to blackwealthrebels.com. You know, that is our community that we're building out right now. Adding content all the time. You know, it's different tiers. We got different things going on in different tiers, but you know, it is free if you just want to jump in the village. It's blackwealthrebels.com. But you know, and by the way, I'm gonna chop this video we're doing right now up, so you know the presentation portion will be available for those paid members in the village to take advantage of. Also, I got some other classes. I got some classes that I wrote out already that I just got to record. So it's about to get crazy, man. And I'm also overdue for a full Bitcoin masterclass. Also, I want to shout out 100 Black Men who gave me the 100 Black Men Philadelphia who gave me the ability to do a presentation yesterday that went extremely well. But I'm going to part of that presentation, but I'm expounding on that will be what's in the Bitcoin Masterclass for 2025. But I guess it's going to have to be April, man. There's so much going on in March, bro. I went back and looked at my calendar for March. It was absolutely insane. So April was a little lighter, but it is what it is. Got a couple things on the, we're trying to get this Saturday class sometime in April started. What else we got, gentlemen, in April?
I got tax season in April.
Yo, you still got tax season. Yeah.
Oh, man. But yeah, we got a lot, man. We got a lot. I'm actually excited.
Yeah, man. I actually got an RCO meeting for this zoning hearing for this development going on in April too, man. So, that's April 9th, man. So for those in the Germantown session, come and support your boy, man. But I digress. You know what I'm saying? March is over tomorrow. Yes, it is. Listen.
Correct.
And that's a good thing. That's a good thing, man. Yo. Anyway, and for my tenants out there, rent is due in a couple days. But I
got rent collection. It's not a good thing for me.
Listen, bro. I don't want to talk about that, man. That's a little triggering right there, man. It's cool though. Yeah, I mean, I'm about to move.
That's what I'm going through, though. You asked how I am. So
I got you.
Rent collection,
taxes. Rent collection and tax season.
And taxes. Yes. So it's not fun at all. But hey,
man, listen, you want to live this life, you know. You in the finance space, you want to live this life, you know.
listen, I need to hit the lottery. Too bad I
For,
don't play.
for a couple $, I'll get the money back how I get it back.
Well,
Listen, man.
I'm not going to jail, Corey.
This is
I
man.
cannot be an accessory to crime. Sorry.
So with that being said, though, this is why the stock market is what it is, why it's important, and why it's good to understand how to utilize the stock market to create income, you know, to build what's the I hate the term, you know, the buzzword, the generational wealth. You know what I'm saying? You know, but let's get into it, man. You ready to start this presentation, man?
Indeed.
Real quick. What up, Jigga? Or did we already speak to Jigga? Yes. Ed Mubarak. Salute to all the Muslim brothers and sisters.
Salute to all my folks, man. Salute to all my folks, man. Close the door, donate all the money that you all right, man. So if you guys are ready to get into it, let's get into it, you know.
We not leaving here without $40,000.
All right.
Wow.
All right, listen. You know, I got, as you guys can see, right? You know, it's like hoodie mellow. I got the shadowy super coat hoodie on, so y'all know what that is. It's time to get into a Sunday presentation. And today we're going to talk about EPS, earnings per share. You know, what is earnings per share and why it matters? It's a guide for investors to understand this metric, and how it can be used, right? So we've went over a lot of different metrics in this Sunday series, you know, intro to options and also stock investing. And for those that are in the village, you know that we have an intro to the stock market course already back there, but we're kind of breaking it down week by week and making it, you know, smaller chunks and building this up, because this talks not only about investing in options, but also just looking at metrics to evaluate a company from a long-term perspective. I start by saying this, which I've said every class, and I'm going to continue to say because I feel like this gets lost in the sauce a lot of times. When you're buying your stock, you're buying equity in a company. If you buy one share, you are still buying equity in a company, which means you are buying ownership over a company that, you know, is hopefully giving out goods and or services, you know, collecting revenue that has bills, and you want to learn to evaluate a company to see if it's something that you should invest in that has the potential to grow, or, you know, kick off income, you know, whatever your investment objective is. But I think it's important to always remember that we're talking about ownership of a company. And even if you are in the options game and you are looking to use a derivative of that, what you're doing is you're still controlling shares of a company. So always keep in mind that we're talking about companies, right? So earnings per share is a very important metric to look at when we want to evaluate a company, to see its strength and also to see, kind of how it compares to other companies within that same space. So, all right, let's go. Why metrics matter in investing overall, right? So how do you know if a company is making money, right? So financial metrics reveal true performance. Here's what's interesting. There are a lot of companies on the stock market that people invest in all the time that make no money. And when I say make no money, it's not that they don't make any money. It's just that when you look at how much debt they carry, or you know, how they spend their money, it's not a profitable company. And if it's not a profitable company, why do you invest in it? Now, does that mean you should invest in any unprofitable companies? No. There are a lot of metrics that you can use in conjunction with each other to determine, you know, whether you should be investing in said company. So some people believe in other metrics more than others, but I like metrics personally that just give me a lot of information very fast, right? Because it helps me make a decision on whether I even want to look further into this company. So if there's certain metrics where it doesn't meet a number that I, you know, look to, then there's no sense in me even moving forward. So those are the kind of metrics that I like. And as an investor, you want things that are objective, not subjective. And for those who don't understand the difference, objective is something that is just factual, that you have actual data that you can point to. We all agree that this is what it is. And it's not based on just opinion. It's numbers, right? So there's a lot of marketing hype as it pertains to investing in everything, whether we're talking about the stock market, whether we're talking about the crypto market, even if we're talking about the real estate market. But numbers cut through all the hype, right? At the end of the day is going to end. We want data. Data is king. Data is key. Data is gold. Data is oil. I want those numbers that will tell me an objective measurement and not just someone's opinion. Because what you get a lot of times in the space, specifically in 2025, when you have so much information coming at you, is someone's opinion, and a lot of times it's not based on anything objective. But EPS is a fundamental metric, and it's among the most widely used by professionals. And by the way, EPS, if you're just joining us, is earnings per share. So let's talk about it. What is earnings per share? EPS, right? So earnings per share is simply when you look at the net income of a company and you subtract its preferred dividends and you divide by the shares outstanding. So let's just say a company has a profit of 10 million, but there's 5 million shares outstanding. Just to keep it very simple, the EPS would be $2. So if I'm looking at an EPS of $2, what I want to do is look at other companies within that specific sector that are comparable to the company that I'm analyzing, and see, are the EPS similar? Are they higher? Are they lower? The company that I'm looking at, where does it fit in that equation, right? What's the median EPS for that specific sector? So EPS can be different from sector to sector, but if I'm in the same sector and I'm making an analysis, I want to know where does that fit. And I would use the median personally, not the mean, but that's for another class. So EPS to me is a metric that's used, and this is a very simplified way to look at it, but you get a lot of information right here, right? First of all, you have a positive EPS, right? So that's one thing to start with, right? Because again, some companies don't make money. Let's just keep it a buck. Some companies do not make money, but also always remember that you want to compare companies within the same sector. I'm not going to look at the EPS of, a consumer goods company and compare that to like a high growth tech company, because they're two different sectors, or a pharmaceutical company, or someone in the construction piece. There's so many sectors within our economy that you want to make sure you're comparing apples to apples and oranges to oranges. You know what I mean? So
Jim, a good example of that would be comparing, say, Apple to Google to Microsoft. Would you agree with that?
Yeah, yes. Apple and Microsoft are like, the same people, right? So though that would be a good example. But then now on the flip side, like, am I going to compare like Nvidia to like,
or Nike,
to like PepsiCo? It's like you got to understand what it is you're comparing, and compare apples to apples and oranges to oranges. But this is a simplified way to look at it, and I like to keep things very simple, right? I believe in the KISS method. So company's profit, look at the outstanding shares, and that will give you your EPS. Now, why is it important? Because it's a profitability indicator. It shows how efficiently a company generates profit. When you invest in a company, and again, I'm always going to say invest in a company, not necessarily when you buy a stock, but when you invest in a company, you are giving up your time and energy, and management of that company is responsible for taking your time and energy and creating more time and energy. That is the whole point of this, right? So it's a great comparison tool, because it levels the playing field between different size companies. And that's another thing, not only in the same sector, but the same size, right? You want to make sure that, again, apples to apples and oranges to oranges, right? So the first thing you want to do is get within the same sector, and then realize whether the companies are, relatively the same size. I'm not going to compare like, a startup company to something that's, been in business for 25 years, that's relatively speaking. There's always, outliers to that. Now, the valuation input. This is the foundation for the price to earnings ratio calculation. We did a whole entire class on price to earnings, right? And that's the price of your shares, based upon your earnings, right? So not your earnings per share, but the price of the actual company based upon the earnings. So that's the kind of the difference. And I saw Jamil asked a question about that. But that's the difference, right? Think about just what the words are saying. Your earnings per share. So for all the shares you have out there, how much are you earning per share, right? Versus what is the price, the ratio of the price to earnings, right? So that's what the PE is. It's an actual ratio. What up, Jabbar? All right, so market influence, right? So strong earnings per share often drive stock price up. So if you have a very strong EPS, that can drive up your stock price. But there's limitations of earnings per share. One is, it can be easily manipulated when you think about it. So share buybacks artificially will boost your EPS. Does that mean a share buyback is a bad thing? Absolutely not, right? Absolutely not. But there's also a blind spot when it comes to debt, because it doesn't show a leverage or a cash position. So some companies leverage their resources to try to grow that company, or, grow the books of that company. So there's a blind spot when it comes to using that leverage and showing it in your EPS. And sometimes you can miss out on growth, right? It misses future potential. So the thing about following the stock market for a long period of time, you will realize that some of our best and brightest companies, when you look at the beginning, they didn't earn a lot of money because they were reinvesting into growth so much. And they were literally planting the seed of what will become. A great example of that will be Amazon. I remember for years, Amazon didn't make money. But what none of us knew was what they were actually building in terms of their infrastructure, in terms of their cloud computing. You know, a lot of us looked at Amazon as a company that sold books, right? But we didn't understand the full vision of what was being built there. And, you know, for someone who's looking at strictly EPS or the earnings of a company, you might have missed that. So the thing about allocating capital, and I know Kamari did a whole class on capital allocation. By the way, if you're not in the village, you got to get in the village because this class is on all kinds of stuff there. But when we talk about capital allocation, some folks are investing strictly for income. Some are looking for a lot of growth, but you can miss out on growth by just focusing on certain metrics. That's why you have to do a full analysis and look at a lot of the metrics that we talked about week in and week out. So if you're in the village and you go to where it says options 101, you'll see a list of classes, and each class is about a different metric or something that pertains to, you know, not only investing in stocks, but trading stocks. So you want to make sure that you watch all of those. Don't just take one in a vacuum and start to make decisions, because things like, you know, the manipulation, right? Something else that manipulates EPS are Kamari's cohorts, right? Historically speaking, accountants like to play all sorts of games. You know what I mean? I see Kamari shaking his head. Corporate accounting is something else, but, you know, I don't want to turn this into a referendum on corporate accounting. But Enron. Anyway, that was your accountants, by the way. Yeah.
Well.
Right. No. I got it. Yeah. Okay. Come on. Let me.
It was account. So you bring up Enron, but don't forget about WorldCom, and don't forget about there was another major company that.
Oh, listen, I can give you 50, 11 different.
No. So I'm agreeing with you. Like the financial engineering is a bad thing, but a lot of times it's driven by the finance teams and not just the accounting teams. And there's a distinction between accounting and finance. But yes, I don't want to derail the presentation.
Okay, I just want to make sure you're awake. I know if I slander accountants, that you would jump up in there.
I'm not playing with you today, Jim.
That's funny.
Anyway, man, listen. The point is you have to look at all the different metrics and put them together. You can't just look at anything in a vacuum, and that's the overall point. Here's an example of that, right? A lot of people don't realize this. And let's talk about objective data, right? Warren Buffett, who's everybody's favorite investment uncle, he's considered the greatest investor of all time.
Should we change his name?
Huh?
Should we call him White Boy Warren?
You can, but here's something. Here's an interesting data point, right? He's been around forever, right? He's made most of his wealth post being 50 years of age, but he's purchased $77.8 billion worth of his own stock since 2018, and that's twice as much as he's ever invested in any other company. You want to talk about betting on yourself, right? So sometimes what happens is you'll look out there and look at the investment spectrum, and you say, yo, there's nothing worth investing in more than my own company, right? But that share buyback adds value to his shareholders. He's a believer in not paying dividends because he believes that paying dividends actually is more problematic than investing back.
Yes.
He would rather buy back shares and grow his own company than to pay out a dividend to his shareholders, because the logic behind that is, if I pay you out a dividend, it's going to be a taxable event, right? Which then cuts into, again, here's tax. Look at Kamari jump up. All right, so it's a taxable event, right? Which then dilutes the amount of money you're getting anyway, versus buying back the shares, which is a non-taxable event for you, the shareholder, which also increases your value. But something like this, and the reason I bring this up in this presentation is because this has an impact on EPS. But just because it has an impact and is somewhat manipulation, if you want to use that term, it doesn't mean that it's a negative. It can be a positive. So I don't want you guys to look at this and say, well, share buybacks are a scam, because they're not, because it actually adds value. You're taking the equity and you're making your actual shareholders have more equity by buying back the shares that are outstanding. So this is an example of something that will affect EPS, but it's not necessarily a negative. So just wanted to point that out. And by the way, Arthur Anderson, definitely enabled the Enron scans. So, we by the way, there's a great documentary. It's called hold on, let me finish. There's a great documentary called
There's
The
more
Smartest
to it than that, but go ahead.
It's called The Smartest Guy in the Room, or Smartest Guys in the Room, whatever it is. I'm not sure if it's plural on that. But it's an excellent documentary. Take a look at that if y'all don't know what we're talking about.
What Anderson did do, or didn't do, is they didn't hold the ethical standard, and they allowed Enron and WorldCom to do all the shenanigans. People don't realize that accountants are there to check the ethical standard as well. And so when you don't do that, it gets really goofy real quick.
Hey, Corey, you hear this? This is why I say what I say. I'm not going to say it because Corey always pauses me when I make the statement that I make about the, but Kamari always want to play victim, right? He even made Arthur Anderson victims in that. Like, they got bullied. He basically said they got bullied by the finance and corporate people. That's what you just said.
What I said was they didn't hold the ethical standard. So they have to accept accountability for that. But they don't drive that. They didn't drive that. They just didn't hold the standard.
I mean, they were in the room. They were they're
the money police, and they didn't do their jobs.
To quote Alexander Hamilton, if you believe he actually said that, man, it was in the room when it happened. All right. So anyway, don't be a one metric investor, and I think that's the overall point. We can look at revenue growth. Is it top line expanding, free cash flow, and we can go into all these things. And it's not really about that. Jamil brought up PE ratios, return on equity. So it's kind of the efficiency using shareholder money. So the analogy I like to use is this. If you're going to buy a car and you say, man, that car got a mean paint job, are you going to buy that car just because the paint job is fire? Right? No, you want to know how the car runs. You want to know how it is on gas. Hopefully you care about safety. You know what I mean? Like,
look under the hood, kick the tires.
Yeah. And that's the analogy I like to use when it comes to investing. Like, don't just be like, yo, look at that car paint job is fire. Like, let me get that. Like, no, you want to test drive it. You know what I'm saying? Like, I mean, or you can make the analogy like, would you deal with a prospective partner because just because they're beautiful, they might be a terrible human being. You know what I mean?
That's not a good
what happens to people when they do that.
We see that all the time, bro.
Yes,
that's not a good analogy.
But we do.
It's a great analogy. I think that's a great analogy.
Here's a great analogy, Corey. How does it usually work out?
Bad.
not so good.
Exactly, right? So now here's what that's actually might be a better analogy, because majority of the time it probably won't work out. But even if it does work out every once in a while, it doesn't mean you should still do it, right? You may take one metric as an investor. And it might work out for you, but it doesn't mean that's the way you should approach investing, right? Don brings up Pandora, right? Jody, right? And for those who don't know, we're talking about the movie Baby Boy, right? Jody didn't use one metric when evaluating who his partner should be, because if he did, he might have.
Jody didn't use any metrics.
He didn't use any
metrics.
I think he actually did, though. The reason that Jody ended up with Yvette is because he used multiple metrics when determining who his partner should be. If he used one metric, he might have ended up with Pandora.
Waste the hips metric. Metric.
If he was just using one metric, he might not have ended up with Yvette. But he looked at the overall picture and made that decision. Thank you for that, Don. Don, that's an excellent analogy, yo. That's an excellent analogy, right? Because Jody used more than one metric. But anyway, the point is, use multiple metrics when making a decision about your investment. And, and it's funny because this may sound counter to what I often say when we're talking about trading options, about not doing too much and having all the kind of crazy stuff on your screen. But I don't think it actually is counter. I can see how someone will make that argument. And the reason I say that is because you want to keep things simple, right? But you don't still want to use one metric. Even if you picked a handful and said, I'm not going to look at because you don't want to look at 500 metrics, because the great thing. The interesting thing about finance is people create new metrics all the time. Sometimes it's just a combination of this, and they'll create a whole new metric. So you don't want to get into that, but you want to figure out what works for you. And that's going to be an overall, something that you'll hear as you tune into all these classes as well. You want to figure out what exactly works for you and continuously do that. But you want to make sure it's not just one metric that you're using. So with that being said, here's a real world example, right? So you have company A and company B. They both. Go ahead. I'm sorry. What'd you say?
I just wanted to give an example. I don't want to step on you, but Warren Buffett, Berkshire Hathaway, Their EPS is $61,876. Who would you compare them to? That's crazy. It's nasty work.
It's nothing to compare them to. I was going to say the government, but no, the
A shares is out of control. There's no other comparison to their A shares. A shares is out of control.
But I'm glad you said that though, because that is his point. That's his point. His point is, if we have the ability, based upon our skill set, to grow this company and can create more value, why would I pay you out a little rinky-dink $2 dividend? Like, it's actually going to be counterintuitive. And I want to do a whole show one day about that, right? Because I think that the data is so interesting in that, because I'm someone who in the past was like heavy on dividends. And then actually when I start like running models and looking at the data, I said, yo, I missed out. But I digress. Here's the thing. Here's a real world example. Company A and Company B. I actually was going to grab real companies, but this is just, keep it simple and just very little faster. They both have EPS of $3, but they're not telling the same exact story. Company A has 20% annual growth, has low debt, has a strong future outlook, and expanding its market share. Company B has flat growth, high debt burden, declining industry, and regulatory challenges. So which company would you want to invest in, A or B, right? Now, if you're just using EPS, you're like, well, it's the same. But if you're not just looking at the paint job, if you're not just looking at Pandora and you want to, do a deeper dive, company A might be Yvette, company B might be Pandora. But the thing is, this is why you can't use these actual metrics in a vacuum, because you have to figure out what's really going on with these companies. And this is why every week I say, when you make your investment, you are buying a company. You are buying a company, because if you're just looking at numbers on the screen, you're not getting the full story. You know what I mean? So let's keep it moving. So here's the key takeaways from this, right? EPS, we're looking at the earnings per share. It's simple. It's very powerful, but it's very simple. So a lot of times you can just look at the EPS within a specific industry and you can make a lot of decisions just looking at it, right? Quick profitability check is just one piece of the puzzle, but you always have to zoom out for context. Always zoom out for context. It doesn't mean that it's a bad metric. It just means that, you always have to zoom out, but it can be used effectively to compare companies around the same size within the same industry to make a quick determination of whether that's something that you would like to own long term, or, something that you want to stay away from. You know what I mean? Because again, you got to be careful when you're talking about these companies and these shady accountants. No shade to accountants. I'm just, but so that is my presentation this morning on earnings per share. Thank you guys for, who are here live. If you're watching this on the replay, salute to you as well. If you have any questions, make sure to leave them, within the comment section, because this specific part will still be in the village by itself. Yo, y'all in the comments.
I know what you're laughing at, yeah.
This is why y'all got to pull up live, because y'all be in the comments wilding. Yo, do a deeper dive on Pandora, yo. But and for those who know who Pandora is, Don is referencing the piece of art, the classic art known as Baby Boy by John Singleton. There's a lot of finance lessons within there, but I never thought that Baby Boy would come up in a conversation about earnings per share. I think that's what's unique about the Black Wealth Rebels is our conversations be all over the place, right? So earnings per share and it somehow gets the Baby Boy is like just wild, but that's where we are. So with that being said, hope you guys got something from this earnings per share and figured out a way to use it within your analysis of corporations. Thank you. I don't know. Kamari gonna leave me. I was waiting for Kamari to jump in and close it out, but
Nah, man. Listen, you did a wonderful job. I think EPS is definitely slept on. I look at EPS as like the GPA for a business. And you can compare to businesses just like you compare students. Whoever's GPA is better or higher doesn't necessarily make them a better student, but on paper they look stellar. But then you gotta go deeper.
Why are analogies this morning? That's another good analogy.
I'll try, man.
It's interesting, right? Not bragging enough, but I finished college, man. I was magna cum laude, right? My mother-in-law said, I tell her that all the time. She was like, I was oh Lord. But anyway, that's but anyway, I say, I was magna cum laude. She said, yeah, that was cool. I was oh Lord. But anyway, what's interesting about that is no one's ever asked me in any capacity in life, whether, trying to go for a gig, whether being a consultant. And it's like, I remember in school worrying about my GPA, but does it actually even matter? No one cares.
So I will say it does matter, but long term, no.
Does anyone ever ask you your GPA?
To yourself. It matters to yourself.
I'm not even going to lie. I never looked at my GPA until I got out of college. I never even looked.
But
listen, in college, I didn't have a stellar GPA. I had so many things that were on me when I was in school. I was a single father. I was running a bunch of stuff. I think my GPA flirted between 3. I got to go back and look at it. But I think it's a good measure of what you're doing internally for yourself. What's wrong?
No, Jamil trying to pause. I said magna cum laude. Right. I said magna cum laude. By the way, for those watching live, has anybody ever asked you your GPA? Like, I was just curious about that. As Kamari brought that up, I'm like, I worried about it. I worked on it. You know what I'm saying?
I mean, but it matters when they're giving out scholarships and they're giving out admittance to college.
Sure.
They are looking at your GPA. But again, it's not the end all be all. And again, I don't want to blavascate this thing and bloviate. But again, great presentation today, Jim.
Thank you, sir.
I gotta deliver some rent notices because people ain't paid their rent. And I got taxes due, y'all.
All right, listen. So, for those that are in the village, right? Probably within the next 10 minutes, we'll be back live in the village to go over our plays of the week. That's for those in the village. But if you're not in the village, join the village by going to blackwealthrebels.com. Last thing I want to say before we get out of here on this Sunday morning is, Wednesday, we have Wealthy Wednesdays that's live at 8 p.m. on Wednesday evening, Freedom Fridays, which is 7 p.m. on Fridays. And we're here every Sunday as well. And if you're in the village, we have a lot of stuff popping up, just randomly throughout the week. We have a lot of content that we're creating and a lot of classes that we're creating. I got a real estate class I'm probably going to work on this week. I'm going to drop back there. So it's a lot of stuff in there. Companies definitely want to see your transcript early in the career. See, I've never had that, and I've worked at private companies, government entities. No one asked me to see my transcript. That's why I thought. That's why I'm asking the question. I'm like, maybe it's just me.
My transcripts have been asked for a lot because I'm a teacher. So of course they want my transcripts, but they never really cared about my GPA. It was only because they wanted to see that I had the credentials that I said that I had, not because they cared about my GPA. So yes, I've had my transcripts asked for a bunch, but never to look at my GPA. Even though my GPA was good, what's crazy about my transcript is that it had all A's and F's. There was nothing in between.
Yeah. You know what, though? That makes sense. That makes sense for Corey. Either he cares about it
or he don't care. There's
no in between. It was literally A's and F's on my joint, no in between grades at all.
Yo, Shelby said if somebody asked for his joint, he'd never get work.
Oh man, but listen, y'all, we appreciate y'all here. Like you said, the fact I'm not gonna be there. I gotta get some food, get some victuals, put my monkey suit on, and go get my rent.
Hey, listen,
do my taxes.
Kamari collecting rent the old fashioned way. He pulling up with the baseball bat, knocking on doors like, "Yo, hey Stu, your rent's due," and don't fall on the stair. No, that's a little. No.
I can't comment on that.
Coming to America. Again, is real estate viable at the moment with prices and interest rates high and folks getting laid off and not being able to keep up with rent? That is an excellent question, right? So here's what I'll say. I'll answer this briefly, and I'll make 2 comments about this. First of all, there's real estate, then there's land, right? Land always has value, but then there's real estate. Real estate will have value too. I think it's really about where you're buying and what you're buying, right? And what you're buying. Because the last property I paid for, I think I paid a couple grand for it because, someone was, dealing with some stuff and they were trying to just unload the property. So I'm at a situation where I can't lose. I say all that to say it's really about how much you're paying for that asset. And that's with any asset. But to real estate will always have value because guess what? people always gonna need somewhere to lay their head, and people are gonna always need space. You know what I mean? Because whether we're talking about a church, a school, space is important. As mentioned in a book called Own Your Time and Space, which you can find at ownyourtimeandspace.com. But I digress. So real estate, yes, will have value.
No, don't digress. Don't digress.
But I would be careful, Jamil. I see why you're asking that question. I would be careful in terms of where I buy and what I buy.
How you acquire it and what you paying for when you acquire it.
Because I believe that. Go ahead.
Isn't that the case though? Right. So I'll say this: real estate's always viable, and I'm echoing Jim's point. Just depends on the price you're buying it at. It might be viable, but it might not be profitable, and that's two different things. A lot of people don't think you should be. Every deal ain't a great deal, and in order to be profitable in real estate, your numbers make sense. You got to make sure that your numbers make sense. So
yeah, listen, buy for one, sell for two, man.
Prop Joe.
You call him Proof Joe, Prop Joe. Yeah, buy for one, sell for two. That's still listen, man. That's right to the point, but that's exactly what it is. But I think that is really where you buy. One of the things I hate when I see, because land will always have value, but what does that value actually mean? I hate when I'm online and I see real estate people on Instagram and they talk about like, you just got to buy as much as possible. And then listen,
well, they're biased. They're biased.
But here's what I'm adding to that equation, right? Because land does have value, but that value is really
it's tied to things in the environment.
Yes, right.
So even swampland has value.
So here's my point. It does. It has objective value because it exists now. But what I will say is, can it be profitable or is it worth investing in? Is a different equation. I can go across this country, right? And no disrespect to anyone in Topeka, Kansas, but I could look at certain land out in the middle of nowhere, right? And it's like no one wants it. I can go online right now, and I've seen it where you can buy several acres for a couple grand, and people are like, yo, you could buy all this? Yeah, because it's not worth anything other than the objective value by it existing, because there's no infrastructure. The interesting thing about real estate is the value that comes from real estate a lot of times is not from what you do, but from what happens around you. As mentioned in the real estate valuation and analysis course that is in the village at blackwealthrebels.com. There's a whole valuation and analysis course taught by yourself truly. And I'm adding to that constantly. I have a couple different classes that I'm going to put within that section coming up. So take a look at that. But just be careful. Like, don't be online buying, 500,000 acres over in the middle of somewhere that no one cares about, where there's no infrastructure, there's no community. It's not even a site. It's raw land. I mentioned this before. A site and raw land are two different things, right? There's no way to get electricity there. There's no way to get plumbing there. And you just own a bunch of dirty, nasty, filthy land that no one wants. But you own land, though, so you can go online and say, I own all this land. I own 600 acres. You can own 600 acres, right? And I can own you can own 600 acres, and I could own one little row house and have more value than you. Storm Leroy is pushing. He's selling his portfolio because of unstable employment in Hood C+ neighborhoods. Yeah, listen, I actually like some of Storm Leroy's content. I like his content. That's his perspective, right? So he's changing his outlook on how I saw one the other day where he said he used a lot of money and started paying off stuff. So listen, I'm not opposed to that, but that's his perspective, and it's based upon where he invests too. I invest in a big city. And based upon me being in a big city and the land having a value that it has because of all the infrastructure around it, my perspective is a little bit different. I never invested in it. I did one time, never do it again. Where I invested in the Midwest, I'll never do it again. I'm going to stay on the coast. And again, there's no disrespect. But when you talk about all the things that add value to a property, right, from a data standpoint, a lot of those things just aren't there. My sister bought 20 acres in rural land in Texas. No sewage, no roads, no electricity. Crazy. Can't do nothing with it. Boom. I didn't say it. Mike said it, right? That's an example. That's an example, right? But what I'm saying, and I don't know your sister, but I'm just saying I've seen people like, yeah, I got these 400,000 acres. And it's like, cool. I got this little row home over here kicking me out $2,000 a month, and it ain't nowhere, it ain't nobody's acre. So, anyway. I be trying to tell my folks all the time, stop just trying to buy land just to say you got land. That's a bar. Because that applies to a lot of stuff. People just be buying stuff to say they bought it. You know what I'm saying? Like, yo, no rhyme or reason. I just own stuff. Like, cool. All right.
What up, Markia?
Markia, what's good? People
Yeah.
up because they can say they got all this land. GC, but also listen, I'm gonna keep it a thou, man. I've seen actual investors that are friends of mine that like they're in such a rush to acquire so many doors, and they be like, "Yo, I got 150 doors," and I'm like, "Well, how much you making a month?" You know what I'm saying? And they be like, "Yeah, like $2,000, like after all the expenses," and I'm like, "Go get a job." like, dude, like you doing all that, taking on all that risk. You owe the bank $10 million, and you know to make a couple thousand. Like, what are we doing here, folks? What are we doing? Like,
we stunting for the gram.
No,
Stunt 101.
Yo, man, F the gram, F these numbers, because even these numbers are ridiculous, man. Like, you know, I don't even care about gram numbers and all that. Folks be having like 600,000 followers. Instagram only going to show it to 10 people anyway, because we don't control that either. All right, but y'all about to set me off, so much chill.
We digital sharecroppers on these joints, yeah.
Yeah, so it's like people like, man, such and such got 50,000 followers, right? I know a friend of mine personally, right, who got over 500,000 followers, and he told me that the higher he got, the worse his engagement got. He said it's complete trash because, and all he gets now is them trying to get him to pay to get to the audience that he's built up. He was like,
but that is their land, right? They want to rent it out.
No, I get it. But what he said was, the more he built his page up, the more aggressive they got with like, yo, you got to pay. So it's like, I don't even care about that nonsense either, man. So y'all can go and get all the doors and all the rural land that no one cares about. You know what I'm saying? I'm gonna go ahead and I'm gonna, get to this chicken, man. I say all that to say thank you guys for tuning in because y'all about to set me off. You know what I'm saying? But
hold on, isn't it wild that the stock show just turned into a return? We just had a whole separate segment.
Hey, this is Sunday Finance Church. That's why I'm gonna cut out the earnings per share part because this is Sunday Finance Church. We were answering Jamil's question, which is an excellent question, by the way.
No, I love it.
Real estate, Doro say by land.
Let the church say.
Yeah. So I mean, listen, Jamil, that's not a bad approach either, right? It all depends upon your perspective. I know people in Philadelphia who do nothing but buy vacant land and sit on it, right? I'm kind of against that too for a whole different reason. It's more
tell them about them taxes.
No, it's not about tax. It's not even about the holding cost. It's not about the holding cost. It's really about how can I put this? Because from a finance standpoint, it makes sense, but my feelings aren't based on finance. It's based on how I see community, right? So, and sometimes those things clash, right? Because I feel there's a difference between being a speculator and being an investor. I want to add value to a community. I just don't want to suck value away, from a community because some people just like come in and buy land and do nothing with it when people need that land to do other things and they just sit on it and hoard it and try to get wealthy that way. So it's a clash between my thoughts on how that's done. I've been accused of being a Georgist, and for those who don't know what Georgism is, just do your Googles. Henry George was a philosopher who had perspectives on land that I actually agree with. So, but I digress. We could do a whole.
Never heard of him. I will look him up.
Yeah, Henry George, by the way, is an interesting character. I might do a whole video on that because Henry George almost became like mayor of New York. He had a whole lot of stuff going on in his life, but his writings on land and land use are very prominent in the real estate space for those that get into the academic side of real estate. But the fact is, when people just buy land and sit on it and don't do anything, that's kind of problematic in a different way. And GC is right. Like we said, it doesn't really matter. It's all based upon an individual deal, right? Because even I'm talking trash about that rural land. If you offer to give it to me for $1, I might take it for $1. It's always money. This is money to be made depends on acquisition price. This is true. This is absolutely
acquisition price and ongoing cost. And cost and price are not the same thing.
Yes, cost, price, and value are three different things, as mentioned in the village in the real estate valuation section, by the way. Anyway, with that being said, Kamari got to go knock on some doors and collect rent. You know what I'm saying? I got to go show an apartment in West Philly. You know what I mean? But before I do that, though, before I hit the streets, didn't people turn on George at one time? Listen, Jamil, people turn on everybody, dog. Like, yeah, people turn on.
I think you're talking about King George, though, right?
Well, King George got turned on too. King George deserved to be turned on, man. Because man, how are you gonna collect taxes all the way across the sea and not giving any sort of representation? Just send me mine back home. Like, come on, dog, you're drawing. Anyway, me and Corey, within the next 10 minutes, we'll be back in the village to give out our plays of the week. So for
Said
those that are
15 minutes ago, let's get to it, sir.
Yeah, we out of here, y'all. Peace and black power, man. See y'all on Wednesday or whenever y'all pull up. Stack Sats or Dot try and be in the village the next couple days.